You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening, watching to the Financial Survival Network. I'm Kerry Lutz. You know, when it comes to understanding the mining sector, the risky sector that can be sudden death to portfolios if you invest at the wrong moment and withdraw at the exact wrong time, which I have numerous times in the past. So you want to get an understanding of why these stocks do what they do, why they're moving in a certain direction, why they're not moving when you expect them to. Like things like gold, you think we're in an inflationary environment, you're expecting gold prices to go up, and what do? They go down just to frustrate you. So when you think you know what you're doing here, that's probably when you are most vulnerable. Perhaps somebody I know who is extremely knowledgeable, both how the minerals, the metals, the rocks come out of the ground, and then what happens to them afterwards is Dr. Rob Stevens. Rob, you were you've written the book on it, Mineral Exploration and Mining Essentials. You've got online courses. I'm in the midst of one right now. Professional geologist, consultant to industry, government, etc. I mean, if anyone should know what's going on, it should be you. So we're going to put you to the test today. Really appreciate you coming on with us again.
Yeah, thanks, Kerry. Good morning. Great to be here again. I appreciate the opportunity.
Likewise. So first thing that comes to mind is market indifference towards drilling results. Often drilling results indicating bonanza grades. Really, you see companies expanding their resources, right, making discoveries. And this is like, to me, a night at the opera. You know, like when I go to the opera, I kind of just to zone out, sometimes even fall asleep and try not to snore. And this seems to be happening with these markets.
Mm-hmm. Yeah, no, a really good point, Kerry. And, you know, I'm not sure I have a great answer or insight into why there seems to be a bit of offset between the results that are coming out, good news, and the reaction by the market. Maybe a couple of thoughts that I could put forward on that. I mean, one, just with the general markets overall, there's a lot of news out there of concern that they're elevated, and there's some risks that way. Of course, exploration stocks are at the higher levels of risk, and so people may be holding back a little bit on those riskier stocks at the moment, just because they feel the overall equity markets are a little bit depressed. But maybe another comment I would put out there, and I think it's probably a little bit of a hangover of COVID, is that there's been a lot of financing starting in really the summer of 2020, right through till now. There's been strong financing in the equity markets for exploration companies, yet they haven't really been able to fully spend all that money yet. And so while there is some good news flow, there's probably less news flow than there could be given the amount of money that's been raised. To me, that provides a bit of an opportunity going forward, because we will see greater news flow coming out as companies start to spend that money. I mean, most of the restrictions related to COVID and exploration are pretty much diminished now. So as we get into 2022, I think we'll see a lot more news flow, which will hopefully then kick some interest into that equity market.
It's just an interesting phenomena. And usually the vast majority of investors in the market are always on the wrong end of the trade. That just seems to be the way it works. But you mentioned that the metal price index sitting at the same level as it was in 2012.
Yeah, that's right. Yeah, if you look at a metal price index, it kind of combines together, a basket of common metals that companies target in exploration. It is really now sitting at about the same high point that it was in 2012, which really was a peak Yet, if we look at global mineral exploration expenditures for 2020, numbers estimated by S&P Global Market Intelligence, they're saying around 11 billion in exploration this year, whereas in 2012 we were upwards of over 20 billion. So that tells me there's just, again, not as much news flow. I mean, there's about half as much exploration activity going on, so there's not as much news flow. Yet the financings, if you look at certainly on the Toronto Stock Exchange, financing numbers for this year, I mean, we still have a couple months left. There's often, good opportunities for financing near the end of the year, but probably are getting similar to 2012 numbers. So companies are financed up, but their expenditures were down. So again, that kind of comes to my thinking that we're going to see a lot more news flow and a lot more activity as we get into 2022.
Yeah, that's an interesting phenomena. So in a way, what you're saying is that the industry generates its own interest, its own following. And when they fall short of doing that, then the interest kind of peaks and kind of goes away to other things like maybe cryptocurrencies, right?
Yeah, no, for sure. Now, I don't know if that totally, addresses why equities are kind of in the doldrums right at the moment. But for sure, I always say to people, if you're interested in a company or a project and you want to start following them, you always want to know how much money they have. Of course, it's important. But in large part, how much money do they have and where are they at in their exploration activities? Because it really comes down to that news flow. If they're at the tail end of a big drill program, and so there's not likely to be a whole lot of new releases coming out in the coming months, less news flow, they don't get in front of people, that often leads to a bit of softening in the market. Whereas if they're at the front end or middle of a big drilling campaign, there's going to be a lot of news flow. Not all those results will be good, but there's probably a good opportunity for some good results, and news flow generates interest. So really, the more spending, the more news, and the more interest is kind of how I look at it.
And there's a ton of money, probably record, sitting on the sidelines here, just waiting for the interest to peak, right?
Yeah, no, it's a good point. We've been hearing a lot about how much people have been sort of squirreling away in the last couple of years as a result of COVID. And so, I think there could be a lot of dollars still to come in terms of financing. And we've been hearing so much about sort of the low carbon minerals, copper, lithium, cobalt. And sure, they've picked up, but I think there's still great opportunities for those going forward over the next few years. And the concern around transitioning away from hydrocarbons into electrical vehicles and things like that is only going to increase that interest in commodities like copper. So, and it'll wane, it'll come and go, but that's a medium to long term story that's got some real strength to me.
Yeah. So copper hit its peak, right? Hit its peak, pulled back. Last month was a super volatile month. There was a short squeeze. In the midst of it all, it looked like it was heading back towards its all-time high rather, and now it pulled back. But it's definitely in an uptrend. It's putting in higher highs and higher lows.
Don't just survive, thrive. The Financial Survival Network.
Fury Gold Mines is a Canada-focused exploration and development company committed to aggressively growing its scalable, high-grade gold assets with major drill campaigns planned across its 3.5 million ounce portfolio. Fury is led by a management team of proven explorers and developers with a track record of success in advancing and financing project development. Fury Gold Mines is well positioned to create value for investors with low-risk development growth and the potential for a new major discovery. Fury Gold Mines trades on the TSX and NYSE American under the ticker FURY. To learn more, go to furygoldmines.com. That's furygoldmines.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Yeah, no, and I think copper is a great story in the medium to long term for sure. One of the things I would say from a geological point of view and a deposit point of view, there are a lot of copper deposits out there that are known. Many are, big porphyry bodies that are big tonnage but quite low grade. So copper prices in the 450 range, that's pretty good. Even if, especially if copper was to move up a little bit more, some of those deposits now move into the economic realm and can help then support that supply demand that's really going to be, out there for electric vehicles. So I partly say that because I think there's a little bit of a cap uh, for an average copper price. Of course, there's peaks and lows that happen, as you mentioned, but uh, you get really high in the copper price, a whole bunch of those deposits are going to move in and be economic. So I do think there's probably some limits on that price overall. But again, 450 to $5 copper, if we were to stick in there, I mean that makes new discoveries really attractive too, particularly new discoveries that are on the higher side of average grades. Those things are going to be economic and generate a lot of interest. So I think copper is definitely one to keep your eye on, over the coming months and years, really.
Hey, what's also interesting about copper, for the past 9 months, it's closed over $4. From a low of 401 to a high of 461 as far as monthly closings go. So that $4 level has been defended successfully, and that looks like the new floor. So something can happen conceivably to easily make it go to $5 or over.
Yeah.
We just don't know. Plus, we have the inflationary scenario playing out, which I would point out that copper 9 months ago, actually even further than that, like when it hit its low from March, from that point on, it just marched forward. And once it broke $3, it became fairly obvious to myself and others that once it broke that $4 range 9 months ago, inflation was probably the largest driver of price. And here we are. So.
Yeah, well, and gold you mentioned too. I mean, and that's one we always hear is a real hedge against inflation. I think this sort of mature stages of COVID, if I could put it that way, and these supply chain issues and all of that. There's so much uncertainty and a lot of talk about inflation, and yet gold is kind of treading water, I'm going to say again. So, but at good prices. Interestingly, with gold, it takes about 50% of all global expenditures on an annual basis. It's been like that for many, many years. So that's really the commodity more than any other that generates interest. And I don't know, gold's a tricky one. Over the years, I've always looked at ways to try and get an assessment of where it's going. Certainly, that inflation factor seems to be one of the biggest drivers now, but it's a difficult one. There's so many different influences on the gold price that it's hard to put it down to a single factor. So.
For sure.
But one commodity maybe I could mention here for a moment is uranium. Uranium's an interesting one. That one's had some run-ups in the past, and then it was very quiet for a while, but it's had some big price increases this year from about $30 a pound to around 47 right now. So that's a significant increase. It might be one of the stronger commodities to move up. So I would keep an eye out on uranium. I mean, there hasn't been a lot of activity in that in the last few years, but companies with good projects, I always have to sort of, frame that under safety is always an issue for uranium. And though in principle, I think it's a commodity that should have really strong demand. It does not produce any greenhouse gases. It's a huge amount of energy for the size of for the tonnage of material. But the safety issues, the radioactivity always kind of comes up to play. But anyway, I think it's definitely one to keep your eye on because there's a lot of increased interest in that. We've been hearing about issues in Europe and such with power as they're trying to move away to renewables, and that's running into some challenges. Uranium's a really solid one that's going to provide you with a lot of no greenhouse gas power. So I think the interest in that's likely to increase going forward as well.
Yeah, and I might note that it hasn't seen these price levels since January of 2013. That was the last time it was $4. and then it's been a steady progression lower, largely due to Fukushima and the Japanese situation. Also, you had Germany doing an insane thing, which was saying we're going to shut our nuclear power plants. And that put a damper on it. And then I think China's been sitting on a huge stockpile of uranium. So all of these things combined, and then you had the Russian decommissioning of their missiles, all those things just conspired to keep the price down. But now, because of short squeezes, because of the Sprott uranium fund, all these things are really converging to make it go higher. Supply wise on uranium, how are the supplies at this point in time?
Yeah, I'm not that familiar at the moment with the supply. I would agree that you mentioned about decommissioning of weapons. That was a big source for quite some time. Not the case anymore. And I think, like anything, when prices are down and exploration is lower, you're not building new resources. So I do think that if there was a level of increase in interest in uranium, new nuclear reactors being built, that supply could well become an issue. So I think just the lack of exploration really means that we need to see more resources, show up on the market to be able to keep that supply in balance. So I think that could be another driver, going forward as well.
Really, really interesting. So, tell us your courses, how that works. I highly recommend them to you if you have any interest in the sector, because you'll really learn a lot. I know I have. So.
Yeah, thanks. Well, here's my book again. If everybody sees I guess it's in backwards, the title, but Mineral Exploration and Mining Essentials is the name of the book, and you can find that on Amazon if you're interested in it. But also I have some online courses that really cover the sort of technical aspects of the industry, from exploration, prospecting, mine development, processing, all the way through to mine closure. And you can find those on my website, which is miningessentials.com. And you can work through a whole series of videos on those courses that I think really give you a great coverage and understanding of the industry. So yeah, anybody who's interested in that should take a look at my website, miningessentials.com.
Yeah, definitely. I think the course I'm taking has 65 lessons in it. They're nice, small size, fully digestible. You don't need to be an expert to understand what Rob is communicating. He's really got a gift for making what could be very complex, drab, dull science, making it brings it to life, really makes it interesting. So I highly recommend that you take it too, if you're interested in really understanding this sector, because until you really understand how the metal gets out of the ground and the process that it follows and the economics involved in that, until you really get understanding of that, you're never really going to understand why these stocks do what they do. And even then, it's not easy to understand, but you'll have a better, deeper understanding. And that way, maybe when you have these really volatile moves, you won't get flat-footed, you won't get caught off guard, you'll understand what's happening. So
yeah, true. I mean, that's the way I look at it. Informed investing. You're right. It doesn't always get you up to the top, but hopefully more often than not. So
yeah, and a little bit of knowledge can be a dangerous thing, but lack of knowledge could be way more dangerous than knowledge itself. So we'll leave it at that. If you got a question for Dr. Stevens, shoot me an email to kl@kerrylutz.com. Really appreciate you coming by, Rob. It's always great to have you on.
Yeah, no problem.
It's just getting information on this on the raw form, very difficult in this sector that's unbiased and really just there to advance your state of knowledge. We appreciate it, and we'll talk to you again real soon.
All right. Thanks very much, Kerry. Take care.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.